Hi, so here is your video on how to get started on Chapter 2 quiz. So you've already completed your reading quiz on budgeting, and this is the learning quiz. And just like last time, you get two chances at this, and your attempts will be averaged. If you don't click in for a second attempt, if you're happy with your score you get the first time, then you don't have to click in for a second attempt, and it'll just take the score from your first time. But you have to be careful not to even click into it, because if you do, then it'll give you then you'll have to actually complete that if you want to get the points. So from your lecture, you learned about financial record keeping, you learned about budget balance statements and cash flow statements. So we're ready to jump into our homework, and most of these questions are going to talk about net worth. So here, just really quick, to get this in your mind, this is kind of the most important. If you have this in your mind, then all of these will be really easy. So assets minus liabilities equal net worth. So that tells us that net worth could be a negative number if liabilities are more than assets. We're trying to get it to be a positive number. And then you just have to be aware that sometimes they're going to throw some numbers in on here that you don't actually need, so you just have to do a little bit of sorting out what do you and don't you need. So let's read the first problem. So it says you and your Australian bride, Matilda, or we'll say your groom, Matthew, you're applying for a loan and you need to submit a balance statement. You own a Toyota Camry that you purchased for $9,995. The Kelley Blue Book value is $13,995. You owe $8,150 on the car loan. You pay off your Visa card each month, and so you don't have interest, but you have a credit card balance, and it's due in the next 15 days. And you have a student loan balance, and you have this $425 in your checking account. You have $1,540 in your savings account. You own 100 shares of IBM stock that you purchased for $85.50 per share, but now they're selling for $158.42. You have other computer and electronics. You purchased it for $4,000, but now they're worth $1,800 if you sold them on eBay, and your income is $80,000. So this is just a matter of sorting through what goes on at what is the net worth. So what goes on the balance sheet, what do we leave off? So it kind of takes some thought and just look at each of those numbers and say, is that going to have a place on here or not? So the first number we come to, that $9,995, that's what you bought the car for. That actually doesn't matter anymore, so we're not going to use that number. The Kelley Blue Book value, that does matter. That's what the car you could sell the car for today. So we're actually going to go ahead and write that down. That one's going to have a place on our asset list. Then you owe on the car loan, that also has a place. It goes under liabilities. So whenever I do a net worth problem, I just start making a column of what goes in the asset column, what goes in the liability column, and then work from there. So this is the first thing you have in your assets is what the car is worth, and then the first thing in your liabilities is the loan that you have on that still. So then the next number we come to is the balance on your credit card. It says something about paying interest on your credit card every month. That stuff doesn't matter. But the balance you have on your credit card does matter, and that is going to be a liability. So we put that on the liability column. And then you have a student loan balance. That's also going to be a liability. And then the amount that you have in your checking account is an asset, and the amount you have in your savings account is an asset. And then this IBM stock, they're going to kind of trick you a little bit, saying you purchased it. We don't really care at this point what you purchased it for. What really matters is what you can sell it for. If you take 100 times the current price of the stock, that's going to be $15,842, and that's what you'll put on your asset list, and then your computers and your electronics, we don't care what you paid for it, we actually just care what you can sell it for, and we put that down on the asset list. So then you go ahead and add up all of your assets. You're going to get this number, 33,602, and then you add up all of your liabilities. You're going to get 18,172. You're going to follow this formula, assets minus liabilities, to get to your net worth. So I'm going to let you do that final step on your own to get the answer for that. Just looking through the next ones, this one you want to be aware, you'll notice this in the workbook, when they put these alligator mouths, that's how I think of it from elementary school, that means it's a negative number. So if someone, Jeff, has a negative net worth, and he still has total assets of this number, so his net worth is negative, but he does have assets, what are his current liabilities? So if you look on, you can see practice problem number 2 on page 35. You can also think this through. So if you go back to our formula, put the liabilities, we know liability is what we're trying to find. Right now we know what his net worth is, and it's a negative number, and then he has assets. So what you know is that his liabilities are even more than his assets. They're $42,000 more than his assets. So you actually add those two numbers together to figure out what his current liabilities are. So in other words, this number is really big because he still has negative net worth even though he has quite a few assets. So just use that same formula down here. Again, they're going to list out the assets and liabilities for you, and then you're going to do net worth again, same process. This is that same, they're telling you what the net worth is, they're telling you what his liabilities are, so now you have to go backwards and find out what his assets are. But basically it's going over and over again over that same idea of figuring out what goes where and what their net worth is. Then these questions, I'm just going to let you solve these on your own, but they're from your reading, talking about, so this question is, when you have items such as clothing, automobile, furniture, electronics, what value do you use? And it's the value that you can get if you were to pay for them right now. So according to the book, what's that? What's the term for if you were to sell them on eBay or KSL, what could you get for them? Anyway, so just think this through. Hopefully you had a good experience with Dr. Harrop. I look for another announcement for me next week when I will give you another little video and let you know how to do our online class next week. Oh, two really quick last things. I think Professor Holt went over these, or Harrop went over these. The principle of HALT, you can find that in your textbook. This is something you'll see again probably on the exam, so you want to think about that. And also this idea of mad money. Those are kind of two things I wanted to point out that are important to think about. Anyway, I hope this is helpful. If you have any questions, let me know. I'm checking my email and I'll get back to you as soon as I can. Good luck on your, so you're going to apply this knowledge this week to your 2 apply assignments. The first one is to create a budget for yourself, so your actual budget, and then you're going to create, using that information, you're going to create a budget for the family. So these are the 2 slides that we're doing this week. So, or the 2 apply assignments, you are creating a budget for yourself using this document, and then you are also doing the budgeting slides and apply that and add that to the slideshow that you're creating. So anyway, let me know if you have questions and we'll talk to you soon. Bye.